You're welcome. The final point of the accounting cycle is the point at which the financial statement is prepared. And the financial statement is prepared from our accounting books, usually the trial balance. For an accurate and truthful representation of our financial statement, a check needs to be done to our trial balance for an adjustment where necessary at the end of the period. And that brings us to our topic today, the adjusted or extended trial balance. So as you can see on the board, the adjusted or the extended trial balance. So before adjustment, there are factors that we need to consider. And this factor will help us to prepare or adjust our trial balance in a simpler way. So these factors are factors. 1. The accounting entries. 2. The double entry principle. Number 3, items in the 2 final accounts. These factors will help us to, as I've said, prepare or adjust our trial balance perfectly. Now, let's look at these factors. Debt and click. These are acronyms. This debt and click, the first cap D, it means you debit your expenses, you debit your assets, and you debit your drawings. You will debit your expense, you will debit your assets, and you will debit your drawings. It will help us when we are adjusting our trial balance. And the second acronym is CLICK. That is, your C is credit, you credit your liability, you credit your income, and you credit your capital. Please take note of this. The second factor is the double entry principle. And the double entry principle says that for a debit entry, there must be a corresponding credit entry. For a credit entry, there must also be a corresponding debit entry. For a single transaction, you must have credit and debit. Single transaction, you must have debit and credit. That is the principle of the double entry, and it will help us during our adjustment. Items in the 2 final accounts. That is, our 2 final accounts. 1, items in the statement of financial performance. And these items are: 1, expenses. 2, income. income. So the second final account is, let's say, items in the statement of financial position. And these items are, we will have the assets, we have liabilities, we have drawing, we have net income, we have capital. So these are items that will go to our statement of financial position. Without knowing these items or factors, your adjustment in the trial balance will not be perfect. Since you are adjusting the trial balance, we must have the original trial balance. The original trial balance will be there for us to be doing the adjustment. You say the column of original trial balance. We must have a column for the original trial balance, which we'll be using to adjust our trial balance. Simple as that. So, and the trial balance, as we all know, has a two side: the debit side and the credit side. Let's say this is our debit side and this is our credit side. Simple as that. We have our currency in dollar, and we have our currency in dollar. This is the first column in the adjusted trial balance. But don't forget, there is a details or particular, which is not part of what we consider to be a column. We all know that there must be the details of the account. Say details or particular. So we have, this is where our details of the account will be. Okay, so let's say our details of the account, we say assets, and we have expense, we have drawings. These are what will be in the trial balance. We all know these items: drawings, we have liability, we have income, and we have capital. As you can see, you must know these factors. Capital. So in our original trial balance, these are items that will be showing, or that will be in the original trial balance. Your assets, whatever the form of assets, whatever the assets may be, to be in our trial balance. The expense, drawing, liability, income, and capital. So you know the entries. That is the reason why you should know all this. You will debit your assets. So you can see, you debit your assets, you debit your expenses, you will debit your drawings, you will credit your liability, you will credit your income. It's very simple. And you will credit your capital. This is our original trial balance. So at the end of the accounting period, there may be need for adjustment. So if there is need for adjustment, we begin our adjustment. When we are doing our adjustment, the adjustment is not going to be done in our original trial balance column. We must have to create another column for the adjustment. And that is why we must have adjustment column. Adjustment. Simple as that. We must have adjustment. So this is our adjustment column. Yeah, and it's the same thing. The adjustment column must have two sides. One for the credit and debit, and one for the credit. One for the debit and one for the credit. You put your currency sign, So, if there is an adjustment at the end of the accounting period, let's say there is closing inventory. Say closing, we want to do our adjustment now. There's closing inventory. There is closing inventory. These closing inventory are treated in two ways. One, the one that will go to statement of financial position, and this one, the closing inventory that goes to statement of financial position is an asset, so it will be debited. It will be at the debit side of the adjustment. And we must also have a corresponding account. This is where the double entry principle works whenever you're doing the adjustment. At the adjustment column, you'll be mindful with the double entry principle. And all the adjustment that we'll be doing, we'll be using the double entry principle for the adjustment. And the second treatment is going to the statement of financial performance. Statement of financial performance. And we credit it, we less it. So you credit it. So the adjustment here is statement of financial position is an asset, the closing inventory, and the statement of financial performance will less to our trading account and we credit it. Simple as that. So if there is another adjustment, let's assume there is an adjustment for this expense. Say there is prepaid expenses. We have a prepayment, and prepayment is an asset. So, and with debit asset, you go to your debit side and debit your asset in the adjustment column. Since this prepayment is an asset, we have already paid some part of our expenses in advance. And this is the calculation of our expenses at the end of the year. But we have paid some part of the expenses that we are calculating. So we must come to our expense account, since it is a related account, to less it, to remove, say we have paid for 2 months in advance, but this is the total expense that we're supposed to pay for the year. So you have to go to the expense account, the related account, and less it. By lessing it, you credit the expense account. Simple. So you credit the expense account. Prepaid expense, we have debited our double entry. You must credit. This double entry principle is for you to save your time in an examination hall. So since you have debited, the related account must be credited. I hope you're following it. So let's assume again, say we have another adjustment, say accrued expenses, accrued expense, accrued expenses. So this accrued expense is the opposite of this prepaid expenses. It is a liability. Accrued expense is a liability. We have used an asset that we have not paid for. We must come later and pay for these assets that we've already used. That is accrued expenses. So since it is a liability carries credit entry. You go to your adjustment column and put it at the credit side of the adjustment column. Simple as that. Then it must have a corresponding entry. Credit, you must also debit it. One transaction. So you trace the related account. In adjustment, you'll be tracing the related account and make the adjustment. So since this is an accrued expense, still we are on expense account. You must go to the expense account and make your adjustment at the adjustment column. Since we credit this, and the expense will come to add. And that is why we're saying add accruals. Because we must add it to the expense or the expenses that we ought to pay for this year, since we have not paid for it. Then you come to your expense account and debit, you add it up to your expense. Simple as that. So the next thing is, let's assume this is our adjustment for this year. Then the next thing is, you must effect or show these balances in your final account. That is the statement of financial performance and the statement of financial position. And by doing that, you are done with your trial balance adjustment. So let's say a column for, this is statement of financial performance, let me manage it because of space. Performance and statement of financial position. Please, sorry for this, there's no space. So this statement of financial performance must have two sides of the account, one debit and one credit, just as we did for these columns. You divide it, please, sorry for the, say debit and credit. Then your currency sign. Here is the same thing. Your debit and credit, currency sign and currency sign. Simple as that. So you now you begins the adjustment. I hope you're getting it, you're following. So after having the final column, then the adjustment begins. You minus or you plus. You net the accounts up for you to get the final balance that will be used to prepare our financial statement, the statement of financial position and the statement of financial performance. Simple as that. So, and don't forget, these accounts have direct relationship with our financial performance or financial position, the statement. So what I mean is, if asset is at the debit side, the asset will go to the final account or the financial performance or position in the debit side. If an expense is debit, you will debit your statement. Simple as that. If it is credit, your account that has a credit balance will go to your statements at the credit side of the account. Simple as that. So it's a direct relationship. So now let's see it. These assets, and again, if an account doesn't have an adjustment you pick the balance directly to your final account. So, like these assets, it doesn't have any adjustment. You will pick it to assets will be at our financial statement of financial position. As you can see, items in the statement of asset, liability, drawings, net income, and capital. So your assets will be at the statement of financial position. So you come here. So you will come here and say assets. You debit it. It's a debit item. So your expenses, there is an adjustment for it. Since there is an adjustment for your expenses, there is an adjustment. We have adjusted for prepaid expense and we have adjusted for accrued expense. Let's say our prepaid expense was $10, and our accrued expense was $5. For example, and this our expense is $50. So what this is telling us that our expense, we're going to less 10 as what have already been paid from this 50 and add the accrued expense, which is 50 plus 5 is 55. Then minus 10 is 45. So after doing your minus and plus, you will now identify the account that this expense should be. And we say expense will be at the statement of financial performance. So you locate your statement of column of the statement of financial performance and debit your statement of financial performance with the expense. So from what we did now, you will be left with 45. Simple. That is what you'll be doing while adjusting your trial balance. Simple as that. Okay, let's continue. The drawing, we doesn't have any adjustment, and drawings, the items is under the statement of financial position. You go to your statement of financial position, zoom in, statement of financial position, and it's a debit item. It's very simple. Adjustment of trial balance is simple. So you go to the next account, which is liability. We don't have any adjustment for liability, and liability carries credit balance. So you take liability will fall under our statement of financial position, and you credit it, and it will be at the credit side of the statement of financial position. The next account is income, and income, as you can see, is under the statement of financial performance. So you are taking this income to statement of financial performance, but knowing that income always has a credit balance. So it will go to your credit side of the statement of financial performance. See, it doesn't have any adjustment, the credit side of the statement of financial performance. Very simple. Then capital doesn't have adjustment, and capital will be at the statement of financial position, but it's a credit entry. So statement of financial position at the credit side. Simple as that. Closing inventory. One, statement of financial position, as you can see, is debit. You debit your statement of financial position, and statement of financial performance, you credit it. Your statement of financial performance, as you can see, you credit your statement of financial performance. Simple. Then your prepaid expense. Your prepayment is a debit balance. I hope you understand. So your prepayment is always an asset. So you take your prepayment to the statement of financial position at the debit side, since it have a debit entry. Accrual. An accrual has a credit balance. So, and it is going to our statement of financial position as a liability. Credit. You credit liability. Simple. That is all about the adjustment or the adjusted trial balance. And the next thing is you balance, you add it up. While adding, your debit side, debit and credit must be the same. You have a different balance, you are wrong. You come to the adjustment column, your debit and credit side must also be the same. So at the statement of financial performance, if you add the credit side and the debit side, the credit side usually will be higher than the debit side. And the difference, when calculated, the difference between the debit and the credit side will be our net profit. Net profit. Like this. If you add the credit and the debit side, here will be, assuming 2x, and here will be 3x. And if you identify the difference, being 1x is our net profit. So if you add it, you will get your 3x and 3x. Simple. So you come to the statement of financial position. If you add it all, you will get, here will be higher, here will be higher, and you will transfer this, your net profit, to the credit side, and here will be lesser. If you transfer your net profit to the credit side, net profit to the credit side, you will have a balance, the same figure. I hope you are getting it. You will that is why the net profit is here. We transfer this net profit to our statement of financial position, and it will go to the credit side. I hope you are getting it. So this is all about adjusted trial balance, and I look forward to see you in my next class, which we're going to use figures, that is practical example, to solve issues that has to do with the adjustment of the trial balance. Thank you so much. Please don't forget, subscribe to the YouTube channel, The Accounting for All, and click on the notification bell icon, and also click on all, so that whenever we release our video, it will come to you. Thank you so much.